Hey, today we're going to talk about a topic that makes many young people jump out of their chairs every time they hear it taxes. But wait, don't close the video or go to sleep. I promise this isn't going to be a 5-hour lecture on every tax law since Abraham Lincoln. No, no way. My goal is simple to help you whether you're a high school student who just started working as a lifeguard during the summer or a new employee. Understand that filing taxes in the U.S. is actually not that complicated. You may not be old enough to file taxes, but you should know about them because they definitely don't teach you this stuff in school. Not because they're lazy, but because they think teaching kids the difference between a trapezoid and a parallelogram is more practical than knowing how to save a few $100s in taxes each year. An interesting choice. You know what else is super cool? It's the first time you get your paycheck, tax deducted, and you find out that the $5,000 you worked hard for all summer as a lifeguard is missing. And you start asking, where's my money? Well, your money is in a suit, sitting in Congress and probably talking about raising the soda tax. Then you wish someone had told you, hey, listen, paying taxes isn't as scary as it seems in documentaries. There's a way to make it easy for you to understand and do it sometimes for free. And here's that video. If you've ever played a role-playing adventure game collecting items, defeating monsters, and overcoming challenges to level up, congratulations. You already have the skills to understand how taxes work. In games, you earn experience points XP for your efforts. In real life, working earns you taxable income, same concept. Different name. The key difference. In games, every battle brings rewards. In real life, your reward often comes with a pay cut, courtesy of taxes. But don't worry, I'll break it down step by step. Starting with the simplest level. How do you know if you need to pay taxes? Level 1, do I need to pay taxes? The answer depends on your income. If you're mowing lawns, tutoring, or, say, plucking gray hairs from your neighbor's dog and earning just a few $100s, you're likely in the clear, no need to file taxes. But if you have a formal job with a regular paycheck, and your annual income exceeds a certain threshold, for example. 13/8 $50 for a single person in 2023. Welcome to the adult world, the world of taxes. Level 2. Why is my paycheck smaller than expected? You've landed a real job with a proper payroll, but the amount in your contract doesn't match what hits your bank account, missing a few hundred or even a few $1,000s. That's because your employer is helping you pay taxes in advance. Don't be upset, they're just following the law. Most companies estimate your tax liability based on your income and personal status, single, married, supporting dependents, and withhold a portion of your paycheck each month to send to the government. This is called tax withholding. For example, if you earn $50,000 a year and owe 10% in taxes, your employer might deduct $5,000 annually, leaving you with $45,000 to take home. But that's not the end of your tax journey. Level 3. Wait, I have to file my own taxes. Correct. Even with taxes withheld, you must file a tax return early the following year. Think of it as balancing your books. You report your actual income, list any deductible expenses, and compare it to what was withheld. If you overpaid, the government might refund you. Think of it as cashback. If you underpaid, you'll need to cover the difference. Filing taxes isn't a final exam. It's more like confirming you've paid your membership fee to the American Citizens Club correctly. Level 4, how do I file taxes? Do I have to do the math? Good news in an era where computers handle almost everything except eating for you. You don't need to crunch numbers manually. IRS-approved platforms like Free Tax USA, TurboTax, or Credit Karma Tax make filing easy, and many are free. Here's what you do. Gather your tax forms, W-2, 1099, etc. More on those later. Create an account on one of these platforms. Answer simple questions like, are you single? Do you have dependents? Or any unusual income? Keep clicking continue until you're done. The platform automatically calculates what you owe or are owed. With one click, you can e-file your return. Simple. Right. And now, welcome to the special skills area, where every tax professional must play understanding tax forms. It may sound dry, but in fact, each form is an important piece to keep you from being pinned by the government. Think of it this way: if money is water, then the form is the water pipe. It tells you and the IRS where the money is going, and if there are any leaks. So let's start with the national form that most people encounter first. Form W-2, the all-powerful payroll. If you work for a company around January of each year, you will receive a piece of paper called a W-2, also known as the summary of the entire year of hard work. It lists your total income for the year, your total taxes withheld, things like insurance, retirement, etc. Put simply, it's your year's receipt, letting you and the government know how much you've contributed to the country. You have to file your W-2 when you do your taxes, and you absolutely mustn't forget it. You're telling a story without the main character. Form 1099 self-employment income, your responsibility. If you're a freelancer, an online seller, a driver, a YouTuber, or anything else that you earn money from outside of your company, congratulations. You're familiar with Form 1099. There are several types of 1099s. For example, 1099 NEC. If you were paid $600 or more for a side gig, you'll get this. 1099 miscellaneous income, such as prizes, royalties, etc. 1099 INT, 1099 DIV bank interest, dividends, etc. Unlike the W-2, the amounts on the 1099 are not taxed. That means you receive 100% of the money, and the tax calculation is your job later. This is why many people are shocked to find out they owe the IRS thousands of dollars, even though they thought they did nothing wrong. Form W-4 set up your taxes from the start. When you start a new job, the company will give you a form called a W-4 to fill out. This is the form that tells them how much tax to withhold from your paycheck each month. The more dependents you claim, the less tax you will have to withhold up front. But if you claim too cleverly, you may end up owing the IRS thousands of dollars and have to make up the difference at the end of the year. On the other hand, if you claim fewer dependents, you'll have more deducted each month, but you may get a refund at the end of the year. How to fill it out properly step. If you want to save yourself a headache at tax time, just fill it out honestly and let your tax software do the math. Don't try to cheat by making a false statement. The IRS is no dummy. Form 1040, the final summary. Once you've gathered your W-2s, 1099s, and other bits and pieces, you'll use them to fill out the final boss form 1040, also known as your official tax return. This is where you sum up all your income, calculate deductions, calculate your taxes, know if you owe more or get a refund. Don't be afraid of Form 1040. You don't have to write it out by hand. Tax software will automatically fill out your 1040 for you based on what you've already filed. You just need to understand it as the final destination of the whole journey. Mini summary. Each form is a tax filing weapon. W-2 for salaried employees. 1099 for freelancers, investors, miscellaneous income. W-4 set up taxes before working. 1040 annual tax summary. With these, you will no longer be overwhelmed every time someone mentions tax filing. When people hear about taxes, they often think of losing money, being deducted, or paying a fine, and then they frown as if they were being asked to pay a debt. However, if you understand how the tax system works, you will see that the U.S. government can also be quite nice and isn't always as cold as the IRS when they send letters. One of those nice things is deductions and tax credits. Two elements that can help you significantly reduce your taxes or even get a refund. But wait, don't be too quick to assume they're the same. To put it humorously, deductions are like using a discount code when shopping. The order value taxable income is reduced before calculating the tax. Tax credits, on the other hand, are like the government giving you cash to deduct directly from your tax bill. If you play your cards right, you can save thousands of C. Standard deduction versus itemized deduction. Which do you choose? First, everyone can choose between two options. Standard deduction available to everyone. It's super easy and requires no proof. Itemized deduction for those who want to claim individual deductions, such as mortgage interest, medical expenses, charitable contributions, etc. Most Americans choose the standard deduction because it's quick. Just check one box, and you're done. In 2024, the standard deduction for singles is about $14,600. That means the first $14,600 of your income is tax-free. However, if you have significant expenses, like annual mortgage interest or hefty medical bills, itemizing may help reduce your taxes even further. Bear in mind that it requires meticulous record-keeping, and it may not be a good choice if you dislike living with papers. Tax credits don't miss out on government money. Now for the exciting part, tax credits. These credits directly reduce the amount of tax you owe, and some, even if you owe none, are refundable. Here are a few standout tax credits. Earned Income Tax Credit, EITC. For low-income earners, this can get you back up to a few $1,000s. Child Tax Credit. Have children. You could receive a tax credit of up to $2,000 per child, and some of it may be refundable. Education credits. Going to school not only makes you smarter, but it can also earn you government support. The two main credits are the American Opportunity Credit and the Lifetime Learning Credit, which can save you hundreds or even thousands of dollars on tuition each year. Saver's Credit. If you're on a modest income and still trying to save for retirement, the government will reward your efforts with some extra cash. There are many other credits available, depending on your situation, such as for adopting a child, installing solar panels, or purchasing health insurance, but you don't need to remember them all. The crucial thing is to carefully check the credit section when you file your taxes. Don't overlook the money the government is ready to give you. So, doing your taxes isn't just about paying off a debt, it's also about picking up money if you know how to navigate the system. In summary, if you consider taxes a burden, you're missing out on a very sweet part of the system. Take advantage of the standard deduction if you want a quick solution, or opt for itemized deductions if you have substantial expenses. And most importantly, don't ignore tax breaks. The government might be holding some money for you, just waiting for you to claim it. Doing taxes is like filling out a college application. It's not so difficult that no one can do it, but a small mistake can lead to unexpected consequences. With the IRS, the penalties for mistakes include fines, interest, and regular reminder letters. So, what are the silly mistakes that many people make, and how can you avoid them as easily? Forgetting to sign or entering the wrong social security number. It may sound absurd, but this is quite common. You might fill out everything correctly, but if you forget to sign or enter an incorrect social security number, SSN, your application can be returned as unreadable. Solution: always double-check your name, SSN, and signature before submitting. Underreporting income. Are you a freelancer, a driver, an online seller? There may be some income that you consider small, but the IRS does not. If you receive a form like a 1099 NEC, 1099K, or 1099 MISC, the IRS has a copy just like you do. Failing to report it means you're losing money to the wrong person. Solution: collect all forms, even the small ones, because sometimes those small ones are why you lose hundreds of dollars in penalties. Miscalculation, especially when doing your own taxes. Do you think you're good at math? Perhaps but are you really good at tax math? A misplaced decimal or a wrong line can lead to thousands of dollars in errors. Solution: if you're not confident, use reputable tax software or ask someone with experience for help. Spending a few dozen dollars to avoid a few $100s in penalties is a worthwhile investment. Forgetting to claim eligible deductions and credits. You already know how many delicious tax deductions exist, but many people skip them either because they are unaware or afraid to fill them out. Solution: when doing your taxes, don't rush to finish when you see the tax due line. Take the time to check for any unclaimed credits or deductions. You could be leaving thousands of dollars on the table without even realizing it. Missing the deadline. The deadline for filing taxes in the US is typically April 15th. However, every year millions of people forget, are late, or think, I can do it tomorrow. The result: penalties, interest, and a sense of panic every time they receive a letter from the IRS. Solution: set a reminder. And if you miss it, file for an extension form 4868. At least you will have more time to prepare properly. So, understanding taxes. Let your money stay with you longer. As you can see, taxes are no longer a scary monster once you understand the rules of the game. When you know what you need to do and what to avoid, you'll find that the tax filing process is no longer as stressful as before, and it can even help you save a considerable amount of money. You don't need to become a financial expert, as long as you are proactive in learning and know how to take advantage of available tools. Handling your taxes each year will feel like cleaning out your closet, a bit tedious at first. But once it's done, you will feel relieved, and you may even find a few unexpected items. And remember, if you find this video useful, don't hesitate to share it with your friends or save it for the next tax season. The more you understand about taxes, the more money you keep in your pocket instead of sending it all to the National Treasury in a daze.